Hello, everyone. We're back with another Manifest Minute. I'm Adam Grantham here, and then I have the pleasure of having Dave with us. And he's the Chief Investment Officer here with Manifest and LPL from the investment side. So we're super happy to have him with us. I know your time is short, and if you could just give us a little bit of information of what's going on out there, and let us know kind of what we should be thinking about or expecting in the news.
Sure, absolutely. Well, thanks for having me today, Adam. I really appreciate it. I think it's been really interesting in the market. If you look back, and we were kind of talking about this at our outlook for 2026, if you look back over the last 3 years, it's been three tremendous years in the S&P 500, up almost 20% for the last 3 years in a row. And so I think now going into 2026, people naturally start to kind of digest that and wonder, have things gotten a little bit too expensive? Have things changed? And it's already February, and we're starting to see a little bit of chop in the market, which I think is completely normal as people kind of digest what we've seen. As a lot of you know, that's been driven by the AI story and the technology stocks over the last couple of years. And while those have really run a long way and been really a strong story, it's left some other things behind, more of the real economy type of things. And so what we've witnessed so far in 2026, we call them the cyclical parts of the market, or I kind of refer to them also as like the real economy. Things like, the basics that go into the factors of production, things like steel, things like concrete, things like I'm sure many of you seen the moves up in popularity in gold and silver this year. Those types of things have been working, I think, as other people have tried to, really reevaluate and see if those make sense. And that doesn't necessarily mean that the technology story is over. It's more of, things get to a certain point where they're either cheap or left behind, and people try to kind of rebalance and take advantage of that. So I think what we're seeing in the market is pretty normal right now. There's a lot of kind of interesting things going on in 2026. We've got some geopolitical issues going on. We've got a new Federal Reserve chair coming in. I think that's kind of part of what we've been seeing in the gold market is, people are still worried about inflation and things like that. So there's been kind of a flock toward the precious metals trade that had maybe been left behind years ago. So always interesting in the markets. There's a lot of things that we're watching, but really just kind of trying to stay the course and understand that long-term fundamentals are important. We're not looking to be traders. We're trying to invest for the long term, and slow and steady wins the race.
Yeah, absolutely. Sometimes I feel like I'm living in a futuristic book or something when I hear about, they want to build data centers in, AI data centers in space now and all this stuff happening. It's just a kind of a fun time to live in, but it can also be scary. As you think about that within, the investing world, has your philosophy really changed at all with, concentration and, around that type of thinking within risk?
Yeah, I mean, I think if you look kind of consequently with all that strong performance in technology, it would make sense that that takes up a larger part of the S&P 500. And so those are a lot of the conversations we've been having around, does that make sense? Do these positions still kind of warrant where they've been? And I think if you look at a lot of the earnings growth that we are looking at, that's one thing we kind of monitor in the market to see where the dollars are going. For next year, if you look at kind of the average of all the Wall Street analysts, they're thinking that technology stocks and technology companies are going to grow their earnings by, on average, 30% in
Wow.
2026. So if you look at that, that's far larger than any of the other sectors that are out there. Again, that doesn't mean that there's not a reason to have diversification or anything like that. But I think this little kind of bump in the road that we've seen in the market over the last kind of month or so is people answering that very question you just asked is, do I need this much technology in my portfolio? And I think that just kind of speaks to the long-term importance again of having that diversified look because not everything goes up at once. Some things go up while others go down. And so kind of having that risk adjusted and risk minded approach to building your portfolio, what we do at Manifest, I think makes a lot of sense and kind of helps you weather the storm kind of through any market.
Yeah, absolutely. I like what you said about, putting it in perspective of the real economy growth and, conversely, putting that with tech. I think that really helps, put some things in perspective. If you had one idea to leave, with a, retail, broad-based, investor, what would that be?
At this point, it's difficult. I mean, like we said, we kind of have seen some of those stories. We're asking the question right now, you know, do they still have legs? Are they still going to continue? I think a lot of the, Mag 7 companies that we've talked about in the past and have really been in the news, there are some really great fundamentals there. And, companies you've heard of, they've been around for a long time. Those are areas that you could kind of look and maybe watch the market and see, you're probably getting some buying opportunities. That would be something to focus on. Another thing, kind of going back to the real economy area that was just kind of interesting is when you mentioned the data centers, a lot of the money that's being spent to build those, it's not just on computer chips, it's on other things like the asphalt and the steel to construct the buildings. And so those are kind of areas that have been getting attention right now and areas that can be interesting. Those things tend to go in building cycles, so they can kind of go up and down over time. But there's a lot of interesting things in the market, so you could kind of take either of those kind of tax and still have exposure to kind of that AI technology trade. So like I said, I don't know that it's necessarily over. It's probably more just kind of taking a breather at this point.
Okay. Okay. Good deal. Well, always appreciate your time. Thank you very much. And we look forward to your next insight as we have you on again.
Absolutely. Well, thanks so much for having me. I really appreciate it.
Absolutely. Thank you very much.